Hello traders, you're welcome to this video. In this video, we are going to be discussing the best MACD settings for day trading. So in order to improve your chances of identifying trend changes and spotting potential reversals with the MACD indicator, there are settings that can enhance the rate at which the MACD indicator spots both bullish and bearish signals. Okay, so let us start by adding the MACD indicator to our chart. The settings we are going to be using for day trading in this video, we are looking at the best MACD settings for day trading, right? So we're going to be using the fast EMA 12, the slow EMA 26, and then the MACD SMA 9. Okay, these are the default settings and are popular because they strike a balance between sensitivity and reliability for identifying short-term trends. Okay, so how do you read the MACD? Now, as for the MACD line, the MACD line shows the difference between the 12-period EMA and the 26-period EMA. It's a momentum indicator that reveals the strength of a trend. Okay, then the signal line, that is the 9 period. If you remember in the parameters, you can see the MACD SMA, the 9, the one that has the 9 period, is a moving average of the MACD line, which helps to smooth out noise and gives clear crossover signal. So basically, those components of the MACD, they work together. They work together to produce what you see here. Okay, then the histogram represents the difference between the MACD line and the signal line. When the MACD is above the signal line, the histogram is positive. When it's below, the histogram is negative. The larger bars, when you see larger histogram bars, it signifies stronger momentum. So basically, that is how to interpret it. Now, when you want to use this indicator to get signals, basically what you should be looking out for are crossovers. Okay, so when you have a bullish crossover, for example, when the MACD line crosses above this zero line, it indicates a buy signal. Okay, and then when you have the MACD line cross below the zero line, it indicates a sell signal. Whenever the MACD line crosses above and you notice the histogram bars beginning to lengthen, that shows a strong momentum. It shows that the momentum is getting strong. So in the case where you find a signal, for example, we had a buy signal here, and we can see that shortly afterwards, you can see how the MACD line began to elongate. You see that showed that this momentum was strong, and the price of the asset rallied all the way up to this point. So if we had entered a buy right after this crossover, that should be somewhere around here, and then we would have considered exiting our buy trade when the MACD line pushed away from the histogram. When you have the MACD line pushing away from the histogram, that's a sign to exit your trade. Now, in the case of a sell, we can see that after this bearish crossover happened, we can see that the price was still moving downwards, and the histogram bars began to elongate, signaling strong bearish momentum. Then a sign to exit the sell trade would have been when the MACD line pushed away from the histogram, as we can see here. So this would have been a good spot to exit. Now, because we are talking about day trading, this is the daily time frame. So for day traders, you might want to go to smaller time frames like the 1 hour time frame. The 1 hour time frame should be okay. Then the signals that we just talked about, they still apply irrespective of the time frame that you are trading on. The signals remain the same. It's just that the time frame you are working on will determine how long your trade will be open for. For example, if you are trading on the 1 hour time frame, you are dealing with hours. Okay, you are dealing with hours. If you are trading on the daily time frame, you are dealing with days. Okay, so each candle here represents 1 hour on the 1 hour time frame. So when you find the signal, and perhaps you find the signal around, let us see, let's just look for a very practical example. We found the signal around here, right? A sell signal, and we entered a sell, for example, and then when we had an exit, our exit signal was here after the MACD moved away from the histogram. So we would have entered around here and exited around here. You would have seen that would have just been a couple of hours. It was some hours. So a day trader can use the 1 hour time frame. But if you are trading on the daily time frame and you find the signal, and then let's say we entered around here and we exited around here, right? That would have taken a couple of days. Can you see? It would have taken a couple of days, perhaps even close to a week before we close that trade. Okay, so as for day trading, you can just work on the 1 minute time, the 1 hour time frame. Yeah, the 1 hour time frame. Now, in terms of divergence, divergence is another thing that traders use when using the MACD indicator. So a bullish divergence occurs when the price is making lower lows while the MACD is making higher lows. Okay, so when you notice that, it indicates a potential upward reversal. Okay, sometimes the divergence is not very common, so we will need to just look for a while to see if we can find that, but if we don't, then we'll just move on. Let's see if we can find an example of a divergence. A divergence, a bullish divergence, is when price is making lower lows while the MACD is making higher lows. Okay, I've seen one. We can see that we had lower lows forming here, and we can see that we had higher lows forming here, right? So this is a bullish divergence. It signals a potential bullish reversal. And let us fast forward a little bit let us fast forward a little bit. We would see that the price kept on consolidating after the divergence had formed. You can see it kept on consolidating, and then after a while, it seems like it began to rise. As we can see, began to rise. Zoom let's zoom in a bit. Okay, let's see what really happened. The consolidation continued. Oh, okay, this bigger time frame has already swallowed the trend line that I do. Okay, so but basically we can see that there was a little bit of an upward movement after a consolidation. Okay, there was seems like there was an extended consolidation. However, that divergence signaled the potential weakening of the bearish momentum. So when you find the divergence, if you are in a sell trade and you find a bullish divergence, a bullish regular divergence, then you might want to exit your buy trade. I mean, if you are in a sell trade and you find a bullish divergence, yeah, you might want to exit the sell trade. And if you are in a buy trade and you find a bearish divergence, you might want to exit your buy trade. Okay, so basically the signals from the MACD are when you have the MACD line cross above the zero line, it gives a buy signal, and when you have the MACD line cross below the zero line, it gives a sell signal. However, it's important you watch out for the histogram bars. When the histogram bars are getting longer, it indicates that there is an increasing in momentum. Okay, when you have the histogram bars extending upwards and they are long, it shows bullish momentum. When you have the histogram bars extending downwards and they are long, it shows increasing sell momentum. But in the case where you see short histogram bars, it shows that the momentum is weak, and you can see that the price didn't really move so much. Okay, so by adjusting the MACD settings and interpreting the signals correctly, you can better anticipate trend changes and make more informed trading decisions. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos. Cheers and happy trading.